Savings and investments, two equally important yet very different places to put your money for the future. Welcome to The Whole Truth. My name's Monica Felton, and I educate families on how money works in a way that you can see, hear, and understand, hoping that it'll motivate you to take action and begin planning financially for your future. Let's talk about savings and investments. Here we are back at the personal economic model. And remember, this is a visual of how money runs through your fingertips throughout your lifetime. And it starts here with income. Remember, it comes in through this big bucket here because that represents all the money that's going to run through your fingertips over your lifetime. It comes down into this first filter. You have to pay taxes. Uncle Sam wants their money. And every dollar not saved runs out of your economic model, never to be enjoyed again. But if we can push money up to storage for future lifestyle, which is what we're talking about today, you have some choices. You can put your money into investments and you can put your money into savings. So let's talk about the very different characteristics that sit with investments and savings. Investments are about risk. The characteristics of investments are growth motivated. We put our money at risk because we want it to grow. It's usually market driven, which also will give you volatility, but we're doing that for the benefit of high rates of return. Now, the reality is what goes up comes down and goes back up again. So there is opportunity for loss. Now, investments tend to be liquid, which means we can sell out quickly and get access to cash, and we can make high contributions. Now, the instruments that are used to get exposure to risk are things like stocks, bonds, mutual funds, ETFs, commodities, variable annuities, and investment real estate. Those are instruments that you can use to get access to these risk characteristics. You'll see in this model that this bucket does not have a lid on it because yes, risk means your money can grow, but it also means your money can be lost and therefore evaporate out. Now, let's look at the characteristics of savings or safe money. The characteristics of safe money are just that. It's safe. There's a no loss provision, so you don't have to worry about your money going away. There's no market exposure and therefore no volatility. This money is liquid, which means it's easily accessible, and you can make high contributions. Now, the types of instruments that you can get access to safe characteristics are things like a savings account, a CD from an FDIC insured bank or a certificate of deposit, cash, fixed annuities, and cash value life insurance. Now, if you've watched my channel at all, you know that I'm a huge fan of balance. I want my clients to fill both these tanks over their lifetime. So when their income drops or is significantly reduced, that you can turn on both these buckets and live the lifestyle that you've grown accustomed to, adjusted for inflation, and not run out of money. When you have balance and both of these buckets filled, that gives you options, and options allow you to maximize your wealth. Let me show you what I mean. Let's say I'm saving for the future expense of college, and I have the college money invested in mutual funds. If the year that my student goes to college, the stock market drops, I will lose money with the mutual funds. If I have to use that money to pay for college, that means I have to sell out of those mutual funds at a loss, and I will definitely lose money. But what if you had your college money, some at risk and some safe. In this same scenario, if the market dropped the year that your student was going to college, I could use my safe money. I could allow my risk tank to recover. So I'll use my safe money for the first couple of years of college. And then after my risk account recovers, because we know when the market goes down, it usually will go back up, then I can spend this money and finish out the remainder of the college expense. But having options allows me to maximize my wealth. Now, I have a video called Maximize Your Wealth with Safe Money. I would encourage you to watch that because it proves this point perfectly. When storing your money for the future, you have choices. You can put your money in investments, which represent risks, or you can put it into savings, which is safe. Now, as discussed, I'm a huge proponent of both. I want you to have balance in savings and in investments, because when you do, you have choice. And when you have choice, that usually means you're going to keep more of your own hard-earned money. Over the next couple of weeks, we're going to talk about these instruments that we use to have access to the characteristics of risk and of safe. So stay tuned, but until then, never stop learning.